Hey, it's TaxQuips time from TaxMama.com. Today, TaxMama hears from Tony in the TaxQuips Forum with this question. He says, I have a friend or client who had self-employment income in both the U.S. and Canada. He's already filed in Canada and is asking me to use the same income amount declared there in the U.S. He now owes the Canadian government about $5,000. Any advice on how to handle this would be appreciated. Well, Tony, if he's a U.S. taxpayer and files a regular U.S. tax return, a Form 1040, then that's just what you do. You file a regular tax return. You report all his worldwide income. Then you can use Form 1116 to take a tax credit for the taxes paid to Canada, or you can take the Canadian taxes as a deduction on the Schedule A. But check with your state laws. They might also accept the Canadian taxes as a state tax deduction. Some states do. If your friend lived in Canada for more than 330 days out of 365, he might be entitled to the foreign earned income exclusion. But I don't get the impression that this was the situation. But if he was entitled to the foreign earned income exclusion, he would still have to pay self-employment taxes on those earnings. Naturally, if I were working with such a client, I'd be getting a lot more information about the nature of the work and where the work was done. Then I would check the Canadian tax treaties to see if there are any provisions to take into account on his behalf. If this is more complicated, you need to provide more information. Otherwise, it's pretty straightforward. And remember, you can find answers to all kinds of questions about international tax matters and other tax issues free. Where else? At TaxMama.com.